Right now, it's time for charting futures. Here's Abigail Doolittle. And Abigail, September is starting off with the overall risk-off tone of August.
You're right about that, Romaine, for sure. We have stocks lower, bonds higher, oil lower. Let's take a look at what we have on the day, the trading action. There we go. The S&P 500 futures down about 0.9%, off the lows. At the lows, down more than 1%. But nonetheless, a pretty solid size decline. Oil declining down 2%. That, of course, is another risk asset. Copper down 0.9%. And, of course, Haven bonds being bid up. Treasury note futures up 0.3%. All of this, of course, having to do with continued trade uncertainty and that ISM manufacturing print earlier coming in disappointing, not only disappointing, but in contraction below 50, suggesting perhaps there could be some sort of a recession ahead. Now, all of this is not new, though. Romaine was mentioning that it is August. If we take a look at this chart that goes back to the third quarter, it's pretty interesting to take a look at this. What we're looking at here is the month of July. In purple, we have the E-mini futures, S&P 500 E-mini futures. In yellow, we have gold. In blue, we have yen futures. So that's the yen versus dollar futures. In white, we have treasury notes. We see in July all are higher, risk assets and haven assets. Then the Fed meeting where stock investors were a bit disappointed. Gold took off. All of the trade bumps, talk of a possible recession. We see, based on all of this, some have been talking about the possibility of some sort of self-fulfilling prophecy toward a recession or toward risk off. It certainly seems to be the case right now for August and now September. Gold taking off, up 11% so far in the third quarter. Stocks down 2.3%, but also haven bonds and the yen higher. To talk more about this, I'd like to bring in Steve Sosnick of Interactive Brokers. And there's one quasi haven asset that's not on there. I call it quasi. It's silver because there's also an industrial purpose that you think has the potential or has actually caught right up to gold.
Well, yeah, we talked about this a few weeks ago, and I was noting that silver had really underperformed gold, probably because of the industrial component. And you showed copper on the board before, which is down nearly 1% today. Mm-hmm. But silver caught up over the past couple of weeks. Silver has since captured its underperformance with gold, and that makes me a bit more concerned. Whereas a few weeks ago, sort of around here, I was sort of sanguine, saying, you might want to look at buying August calls. Mm-hmm. Or September calls that expired in August. Now, maybe the opposite's true. You might be looking to hedge at this point.
So you think that catch-up rally could cool off, and maybe even the gold rally? Is that?
Well, I think they're both very extended.
Okay.
And so I think all it would take is either a slight bit of good news or some reversal in the trend. I'm not ready to come out and say, let's go short this thing, because there's certain times you don't want to short in front of a freight train. What I think might be best is look for sort of a pullback. If you're long futures or long the commodity, this is when you probably want to hedge a little bit of your gains. So
let's take a look at your option strategy on silver futures, which creates a little bit of that defensive play.
Yes. So with silver up here around $19, again, having caught up with gold, this is a way to play a pullback with a very minor cash outlay. You basically would buy the 18 3/4 puts, mm-hmm. and you'd sell the 18 1/4. The 18 1/4 puts, because the vols are very high right now, so you want to capture a little bit of premium in return. So this will hedge you down to about, it comes into play, you break even about 18 1/2, or if it goes below to about 18 1/4, that's when you make your maximum profit.
Make some money.
Yes.
Steve Sosnick, love the fact that you are following up on your previous trade that worked out, and now a way to lock in or make even more money off of the possibility of some consolidation.